Here in Canada, we are coming into what might be the worst year ever for Canadian mortgage renewals. In 2025 alone, we have 1.2 million mortgages coming due. And between 24 and 25, we are looking at nearly half of Canadian mortgages coming up for renewal, most of which, 85%, were signed when interest rates were at or below 1%, meaning that the average homeowner could likely double their payment. So today, we're going to talk about mortgage renewals. This is World's Top Agent. I'm Sean Provencher.
And I'm Lorraine Jordan. When should I start negotiating? And can I even negotiate?
This is a great question. And really, yes, you can. There's a ton that you can negotiate. And ultimately, many people kind of feel like they just are supposed to renew with their existing lender, and they'll get that letter in the mail and they'll just sign it and send it back in. And sometimes that can be a really good idea. We'll talk about that. But a lot of the time that might not be your best option. So you should probably start shopping and researching what mortgages look like. I would say somewhere between 4 and 6 months before your renewal. And most mortgages, you're able to slide into a new mortgage product in the final 3 months before your renewal without much in terms of penalty.
I always advise people to start speaking to a mortgage broker to find out if it's best that they stay with their bank or if they should be maybe relocating for a different product. The other thing is the mortgage broker will give you the best interest rate out there. So when you go into the bank to renegotiate, you can have a printout of or show them on your phone the email that you got confirming a very attractive interest rate. And that gives you a little bit more bargaining power at your local branch.
100%. If you have something tangible, it just gives you not only something that it gives you a little bit of clout in negotiations, but it also gives them something. It gives them like that ammunition that they can go back to their manager and say, hey, look, like we're going to lose this opportunity here. Let's keep this mortgage under our funding and sharpen our pencil a little bit for these people. Let's say that you get that renewal letter. Say, hey, you got to sign this if you want to keep your house. What should I do?
So one of the things that I discovered is how high that interest rate has been on a lot of those renewals. You know, the rates came down and I had clients that called and said, oh my God, I got this renewal, but it's for 6%. I'm just calling to find out, like, did I miss something? Didn't interest rates go down? Like, you posted that. And I've gone over what the renewal letter looked like. And, you know, the one lady, she had lost her job since she did the mortgage. So she was really feeling vulnerable and wanted to just sign it. So we had a discussion around it and she decided to sign it in that case because if she had to go to a private lender, the rate would be a heck of a lot higher than 6%.
So there's a lot here, right? And I love that you went there because on one hand, sometimes the bank will almost send you like a phishing letter. They'll send you a renewal that frankly is way above current market rates, which is kind of predatory and mean, but we're not friends with banks. I think we can all just agree that like you got to watch your back around your bank. But if you have had a change in, let's call it like your financial profile, like a lost job, a decrease in earnings, maybe you carrying a lot more debt for the past few years than you carried previously, that could affect your eligibility to go get a new mortgage. It absolutely would. So sometimes, even if it's not the best rate, it is a very good idea to just sign that renewal and keep your house, because your other option might be to go to an alternative lender, like you said, like a B lender, private money or something. And trust me, they're not only going to hit you more on the rate, but their terms are often really, really challenging to work with.
Well, and you want to, I believe that's why the bank sends the higher interest rate out, is to account for maybe some of those ones that are just going to sign and renew, and they probably wouldn't have relent to them knowing the new facts. Probably also just to take advantage of the ones that will and won't come into the branch or won't shop around or won't ask any questions.
Yeah.
So just be aware of what your options are, what your situation is, and reach out and talk to somebody that would have experience with it.
It can't hurt to learn the guidelines of your bank. And you could even do this, I don't want to say anonymously, but you could just do this kind of casually. Many banks will let you renew under a different product still at their brand. without requalifying. So you could go from, say you're at a fixed rate, they may send you the offer at 6%, and you say, hey guys, I'm stoked to renew. Can you show me what products you have if I wanted to go variable? And often they'll just slide you onto variable. You don't need to go through any qualification process. They won't through that learn about any changes in your financial picture, and you're off to the races, and you might save a lot of money.
Okay, Sean, I'm worried that I won't qualify for the new payment. The interest rates are almost double what they were when I got my first mortgage.
So, I mean, there's more than one way to come at this. So on one hand, we talk about just signing the renewal letter. Almost any institution will be more than happy to just renew your mortgage at the same terms or whatever the most current set of terms they have is, like if the rates have changed, obviously, and off you go. They're not going to open up your financial background. They're not going to look at your job history. You just renew. So that's one way to address this. If you want to renew and you can afford the payments, but you can't qualify, you could look at bringing on another party. So you might be able to have like your parents or someone who would take a stake in the property, maybe in exchange for it, that sign off to support your mortgage that allow you to keep the place. So, you know, if you're in a position where you're looking at maybe losing your home, start to get creative, right? Like keeping a portion of your home is better than nothing. Finding some kind of workaround with a family member or someone who you can, you know, make a deal with and keep the property. They just want to see that there's enough behind the mortgage to make sure it gets paid.
I think one of the biggest things is, you know, have you been making mortgage payments? Have you missed mortgage payments? Did you defer? What does that look like? And are they looking at you at you're still a great candidate, someone to bet on that's going to continue making your mortgage payments? If things haven't changed, your income's good, it just may not be good for this new payment increase, then book an appointment with your local bank and go in and have a conversation with them. Find out what's available. You know, if you started off with a 25-year mortgage and it's now been 5 years, you're down to 20. Maybe they can put it back to 25 years to help lower your payment. You know, the interest rate might be lower than what they originally sent you, and there just may be some options there. So it just depends where you're at. Go have a conversation with them, but make an appointment. Don't just walk in. Give them the time to prepare and have the information at hand so that they can provide you with the best options. When it comes to negotiating my mortgage renewal, what options do I have?
This is one of the really nice things that happens when your mortgage comes due is you have the opportunity to look at different loan products. People often think of a mortgage as a static thing that you kind of just pay down over a 25-year period, but there's all kinds of things that you can do. The bank will have a portfolio of options for you, and you should take time to learn about these. You might be currently on a fixed rate mortgage that's really low, and it's going to be really hard to stomach the idea of going to a variable rate or another fixed rate that's higher, but signing for a fixed rate when there's likely a few more rate drops to come could tie you in to a higher rate than maybe you should be paying for a long term.
There's so many different options. I mean, on my investment properties, I have a product where it's like a flex equity. So as I pay down the mortgage, that money gets released into a line of credit that I can then get access to that perhaps the plan was originally to use as down payment on another investment property.
That is one of my favorite mortgage products. Man, you have a tough couple months and you need to pull from something, or maybe you see an investment opportunity or you want to make upgrades to your home. You don't need to have a conversation. You've got this safety net built into your home that's ready to go. I just think it's absolutely brilliant.
And I think it boils down to, you know, you don't know what you don't know. Like this, if you have a mortgage expert that you can go speak to, that's going to give you all the ins and outs of the product. So start with that mortgage broker, you know, in the beginning so that you know what the best rate is. And they probably share some ideas, some other tips. Maybe you're going with them. Maybe their recommendation, like a great mortgage broker might tell you it's best for you to stay where you are. I've had that happen multiple times where, you know, my advice is stay where you are. Here's the best rate.
All right, Lorraine, it's been a rough couple of years. Could I pull some equity out of my home to pay off some of my debt? I owe my mom some money. What does that look like?
So that's something that we've seen over the years where people often, you know, take out that equity, pay down some debt, lower their payments, and, you know, adjust accordingly. What I'm finding right now is depends when you purchased. If you purchased in 2022, chances are you don't have equity The value of your home is not going to be aligned with being able to borrow up to 80%, because up to 80% may be less than what your current mortgage actually is. Being able to do that will really depend on how much you put down, what the price was like, have you made improvements to the house and increased its value? There's a lot of variables there. So likely the best thing to start with there would be getting a real estate professional in to give you a value on your home, so that you can go, hey, I owe this much and the value's this high, hopefully, and the bank will lend me 80% when I refinance.
The big message here is you have options. Even if you don't feel that you'll requalify, you can always just sign again with your existing lender. If you can renew with your lender, but you can't really make the payments, take someone in who can make a contribution to the home. Rent out a room, rent out the basement. It's better than losing the property. Make sure over the long run that you're not hurting yourself by just digging yourself deeper and deeper into debt. And if you have questions about how this all applies to your own personal situation, feel free to reach out to us. We want to help people with this kind of stuff. If you enjoy this, you get value from this, please like and subscribe. It helps us make sure that we're in front of the people who get the most value from what we're putting together. Thanks for watching.